Hey there, this is Enea. Today we're going to talk about the current market conditions and how it correlates to BTC and MSTR. We're going to look at the market through some very interesting visuals and some of my favorite trading signals. So let's start. Here I'm plotting the Bitcoin MSTR and also VOO ETF, the Vanguard Standard & Poor's 500 ETF prices on a log scale. And as we can observe, they are very, very high correlated when long enough time is actually plotted. So we are looking at here since MSTR started to build their own Bitcoin treasuries, and we can see that, of course, the price of MSTR is dependent and highly correlated on the price of Bitcoin, but the price of Bitcoin itself and then MSTR are highly correlated with how the current market, the Standard & Poor's, is going. So we know that liquidity, global liquidity affects these, but also world events, and all the risk assets, and Bitcoin is considered as such so far, are affected in a similar way. And acknowledging and being aware of these correlation is actually a very important factor in order to spot opportunities or watchouts. And we're going to see that in a minute by looking at trading signals. But first, I want to look at a graph that I would call volatility's vitality. And why? Because look at here. We know that these three assets are very highly correlated when we look at the log price. So they move in the same direction. They move with the same patterns. But the volatility that they're affected by is very, very different. The Standard & Poor's in the same period we saw before, so since MicroStrategy started to buy Bitcoin, appreciated 67%, while Bitcoin 627%, and MicroStrategy 1,832%, with a peak that we remember was around 3,400%. So this is very interesting, and something also to spot in this graph is how Bitcoin and MicroStrategy actually had the very similar behavior since 2020 until end of February 2024, and then at some point MicroStrategy left Bitcoin down. And what actually happened, as you remember, I mean, here and in this moment, MicroStrategy was a proper, let's say, tracker of Bitcoin. But then in 2024, with the coming up of the ETFs, MicroStrategy started to change strategies. They started to acquire Bitcoin more aggressively, and it became very clear that MicroStrategy represented Bitcoin on leverage. Since then, the price detached from the Bitcoin price, and I want to spot something for those of you who are freaking out about MicroStrategy price, is that when we look at the curve and we look at the peak we had in basically 1 year ago, in March, we reached 1,300%, and then we dropped down to 600%. Basically, half of the returns from the peak to the bottom. The returns halved themselves, and the same actually happened now. It's just on a different scale. So we reached 3,400% return, and now we are at 1,832% returns. So then we had here a period of consolidation, and as soon as the Bitcoin price went up, then MicroStrategy price grew even more. But now let's look closely at the current market conditions. So I picked the price returns since the 20th of February, when the price started to drop, and we can see how for the Bitcoin the price dropped around minus 20%, MicroStrategy had a bottom at minus 26%, and the Standard & Poor's around 10%, minus 9%. Something to spot and to point out in this graph is that while Bitcoin and MicroStrategy seem to have found a local bottom, at least for now, the Standard & Poor's didn't. Probably due to the good news about Ukraine from yesterday, the Standard & Poor's today will have a positive green day, but I would definitely look for watchouts here. Watch out at the Standard & Poor's, how it moves, if you want to spot an entry point for your trades. But instead of looking so closely, I would propose we look actually at the bigger time period, and we look at one of my favorite trading signals. In particular, there is the 20 days returns, percentage returns. I find it a very interesting signal because it allows to have enough days to account for a price drop or increase. And when comparing Bitcoin, MicroStrategy, and Standard & Poor's, we can see some very interesting things. First of all, I marked here similar price drops, and we can see that in this time frame, since the beginning of 2024, actually the price drop that we saw with this dip was really exceptional for the Standard & Poor's and also for Bitcoin. We had some more. We touched the minimum, or we got closer to it several times with Bitcoin due to its volatility, but the Standard & Poor's touched only one more time, and another time went quite closer. Something to point out in this graph that is very interesting and you might want to remember is that every time we went so low, at least in the last 1 year and few months on the Standard & Poor's, that then the 20 days return started to increase quite sharply. So this is not financial advice, but if you would have purchased Bitcoin or even the Standard & Poor's when it got to this low level in the last 1 year and a half, then you would have had a very good rally up. You would have had very good 20 days percentage returns. But I think that this time frame is not long enough, and I want to do some let's say go through some history of Bitcoin and MicroStrategy and also the Standard & Poor to see how this indicator actually moves along and what does it tell us. Here is a wider period from the 1st of January 2017 until now, and I think that the 20 days percentage returns can tell us a lot of information. First of all, let's look at Bitcoin. We see how during the bull market of 2017, the price got really heated up and reached 134% just in 20 days. And there were several other peaks, right? We know 67% as the bull market was starting here, it went down. There was our bear market, and as things were starting to warm up and the price from the bottom started to go up, then it reached 67% return in just 20 days. And here with our bull market tops, it reached again 67-70% in just 20 days. It's very interesting to see also how we can spot by looking at the trends. So if we see the 20 days returns trend here, it was the bull market was growing, then there was a bear market and the price went down, like with volatility, and then once again started to go up. And here was accumulation phase and then once again up. Instead, what about strategy? Strategy has a very clear sign of change, of something changing, of volatility changing. The cutoff was 2020 because in August 2020 they started to acquire Bitcoins, and before they were just having minimum volatility, and then volatility exploded. 20 days returns exploded. There was first a price rally, and you can read here, then in February 2021. And then there was a long accumulation phase until our first peak 1 year ago, as we saw it before in this graph. The price here rallied up as they changed strategy and acquired more Bitcoin, and then once again there was a drop, and then here we are with the last Q4 price rally. Instead, what about the Standard & Poor? The Standard & Poor had, I mean, the moment we put 2020 in, we had an incredible drawdown of minus 31%. This was exceptional, and clearly we never touched those levels again. But it's not super uncommon to have minus 10% drawdowns. Here we had minus 12% in 2023, minus 12% again in 2022, and so on. In 2019 we had minus 13%, and also here, as we saw before, we had minor drawdowns. So it's possible that here the Standard & Poor will not stop, depending on the news, depending on how the economy develops in the next stage. So I would watch out for a further drop, because despite Bitcoin and MicroStrategy found a local bottom, if the world events lead risk assets a bit more down, and it's possible, as we see, this is not even the most, the lowest bottom based on historical Standard & Poor 20 days returns bottoms. So it's possible even that we might go even slightly lower. Said that, I hope you enjoyed this, and I'm building gammaleaf.com so that you can then run this analysis by yourself. If you're interested in it, subscribe and I'll keep you posted, and have a great day.